Hello, investing mutants! Welcome back to another edition of Special Situations Investing with me, Greg. And this week I will be talking about another tender offer. It's a transportation company out of the southern portion of the United States. Check it out. Hey everyone! Welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. So the investment idea that I'm looking at this week is PAM Transport Incorporated, PAM Transport, or it goes under ticker symbol PTSI. So PAM Transport is a transport company that works, about 50% of the revenue comes from working with the automotive industry, and so they do a lot of deliveries, most likely to help get equipment to or supplies to the manufacturing on the U.S.-Mexico border. And they have about 50% of their revenue comes from cross-border transportation, and another 50% of their revenue comes from the automotive. That doesn't necessarily mean that it's the same 50% of their revenue, but they do spend a lot of time in that industry. So transport companies are typically a cyclical industry, and then this company is focused on providing work to a cyclical industry, which to me that adds a different kind of risk to a company, but it also has a different kind of risk-reward ratio. So at first glance, this one doesn't look like that interesting of an investment. It's a tender offer for approximately 1.7% of the shares outstanding. And 200,000 shares, not that big of a deal out of a company that has 5.7 million shares. And another thing that is really interesting is this company is currently trading at about $62.50 per share, but the tender offer is for $32 to $37. It's a Dutch tender offer per share. So I did some digging to try to understand what the price discrepancy was and why it's doing that. And there's a couple of reasons. First and foremost, there is a 2-for-1 split that's also going on at this time with an effective date of the 16th of August. And that tender is on the post-split price, which, if you think about it, if you do a little bit of math, you actually realize that even at the low end of the Dutch tender offer, you've got about $1.50 per current share purchased. One thing to pay attention to with this one, though, is that the 2-for-1 split is on shareholders that are on record as of July 30th. So This one might be kind of weird, and you might have to talk with your broker about it, because and I may even stay out of it just because of this uncertainty, or at the very least I will make sure that I do my due diligence and confirm with my broker that if I buy shares now, which is post the effective date but prior to the transaction date for the split, that I will be able to get the 2-for-1 share split on it if I wanted to participate in it. digging into this a little bit more, this company is owned by a family. That a significant portion of their shares are owned outright by a family. The Maroon family, and the insider ownership in this company is about 68%, a little over 68%, 68.2% of the shares outstanding. They did state in this tender offer that none of the executives or directors intend to sell shares in this tender offer. So part of the issue is with the company is there might be a little bit of a liquidity issue. But this owner, the Maroon, however you say their name, that family, they're going to boost their interests in the company by about 1.4, 1.2%, depending on how well the tender offer goes for them. And this is one of the things to think about with tender offers is you think about the individuals and why they would sell the company, or why they would buy back shares of the company, basically lower the size of the company and stock cash into it. And I don't know if this family is excellent at their capital allocation or anything like that, but they seem to understand this business because a lot of their wealth appears to be tied up in this company and another company that also does cross-border transportation for the automotive industry. So you have an owner-operator that they are repurchasing shares even after the company has gone up, almost doubled over the past year. And something to think about with this company is, that may make it so that you have a good idea that the company's going to do all right. Something to think about also, at least for me, is I have a significant amount of exposure to the automotive industry right now due to Garrett. And the question is do you hit it really hard with Garrett and something like PTSI and then reap the rewards, or do you identify that you may be risking a little bit too much into a specific industry? One note about that, actually, I started thinking about it as I was going through these. I also have a significant exposure to the automotive sales industry through Shift. So, I basically, if I hit this one with 10%, and then Garrett with about 10%, and then Shift represents about 10% of my shares outstanding, or my exposure outstanding, and it's all in the automotive industry, this could be a significant play on that. Now, each of them has different aspects that make them good investments, and this one would be more of a shorter term investment. And I don't know if I want that type of exposure, but it might be good to just participate in the tender and then pull out of the transaction. I do like maintaining my position with Garrett, and that one's more of a longer term play. I'm seeing Shift as more of a longer term play. I see that one in 3 to 5 years being a very good business, but this particular tender offer, PTSI, I don't know if I am confident enough in this industry to feel like I want to put more money behind it. As I already stated, the directors and executives, according to page 19 of the announcement, are not participating in this tender offer. Now, something to think about that actually does change how many shares are going to be purchased in the market as to how many shares are actually going to be traded. And so basically, if I subtract out the directors and executives shares that they have of the company outstanding, and then I just take the balance of shares that are available for trading after that, then you see that this 200 share repurchase agreement actually turns into about 11% of the total shares that are available in the outstanding shares. That's a pretty good gig, and normally I don't like to invest in tender offers that don't look for they don't have at least 5 to 10% of the outstanding shares. If they're going to go ahead and repurchase the shares at that price, get rid of another 11% of the shares outstanding that are not owned by the family, then that seems like it might be a good position to be in. Overall, I think that this might be an interesting investment, and but I will disclose that I have not invested in it yet, and I don't know if I will initiate a position on that. And if you do, please let me know, and I appreciate you watching. If you like these types of videos and you like to learn more about special situations, please hit the subscribe button, and we'll catch you next week. Thanks so much, guys.